Let's talk about Europe, a continent with a rich history, where ancient streets echo with stories of triumph and tragedy, and where every corner seems to hold a piece of the world's shared past. For centuries, Europe has been a beacon of culture, innovation, and prosperity, shaping the course of global events. But today, beneath the surface, Europe is facing a crisis you won't see on the front page. It's not the kind of emergency that grabs headlines or sparks panic overnight. Forget dramatic bank runs and market crashes. Europe's crisis is silent, slow, and deeply personal. It's a creeping sense of uncertainty that seeps into daily life, affecting millions in ways that are easy to overlook. It's the young Italian doubting their pension, wondering if the system they've paid into will be there when they need it most, and questioning what the future holds for their generation. It's the French entrepreneur buried in paperwork, struggling to keep a small business afloat amid rising costs and endless regulations, feeling the weight of bureaucracy with every decision. And it's finance ministers whispering about stagnation over cold croissants, quietly debating how to steer their economies through uncharted waters, knowing that the stakes have never been higher. The real threat? A toxic mix of aging populations, mounting debt, energy dependence, and lagging tech innovation. Europe's demographic time bomb is ticking, with fewer young people to support a growing elderly population. Debt piles up as governments struggle to fund social programs, while energy insecurity and slow adoption of new technologies threaten to leave Europe behind in a rapidly changing world. Europe, once a symbol of prosperity, now faces a slow-motion decline. Everyone sees the wall coming, but no one agrees on how to stop. The sense of inevitability is everywhere, yet solutions remain elusive, and the clock keeps ticking. Why isn't this news? Because it's boring, told in charts, not headlines. The story unfolds in boardrooms and spreadsheets, not in dramatic footage or breaking news alerts. It's a crisis that's easy to ignore, until it isn't. But this slow decline is eroding opportunity for a whole generation, leaving Europe exposed to the next big shock. Young people face uncertain job prospects, families worry about the future, and the continent's competitive edge is slipping away. It's a crisis that whispers, not shouts, but if you listen, you'll hear the future of a continent at stake. Tonight, we're tuning in, because understanding this silent crisis is the first step to changing the story. Let's find out what's really happening beneath the surface. The answers aren't simple, but the questions are too important to ignore. The silent crisis is real, and it's time to listen. The future of Europe depends on it. The main symptom? Secular stagnation, an economic malaise that's become all too familiar across the continent. Europe's economy is stuck in a never-ending nap, drifting through years of sluggish growth and missed opportunities. Since the euro's adoption and the 2008-2010 crises, growth has flatlined. The numbers barely budge, and optimism is in short supply. On a good year, Europe's growth is a fraction of the US's. The gap keeps widening, and the continent struggles to keep pace with global competitors. This isn't a blip, it's a chronic condition. Empty storefronts and shuttered offices are now a common sight in many cities. When growth stalls, companies don't invest or hire, wages stagnate, and innovation slows to a crawl. The sense of possibility fades, and anxiety about the future grows. People worry about job security, rising costs, and whether their children will have better lives. The economic ladder is missing rungs, making it harder for young people to climb. Many feel stuck, unable to find meaningful work or advance their careers. This stagnation has become the new normal. An entire generation has never seen a booming economy. The danger? Complacency sets in, and ambition fades. If stagnation feels normal, bold reforms become impossible. Political leaders lose the will to act, and the public stops demanding change. Europe risks dozing through its own decline, missing the chance to reinvent itself for a new era. You can only hit snooze so many times before you miss your wake-up call. The clock is ticking. Will Europe wake up and seize the moment or let it slip away? The world isn't waiting. Will Europe find the courage to break free from stagnation or keep dreaming while the world moves on? Why is Europe's economy stuck in first gear? It's not one culprit, it's a whole cast. Chronic underinvestment is a big one. Governments are shackled by debt and strict rules, unable to invest in the future. Private companies face red tape and risk aversion, driving talent abroad in a brain drain. Productivity is crawling. Many businesses are stuck in the past, slow to adopt new tech. A few superstar firms can't carry the whole continent. The result? A perfect storm of stagnation. Europe has the talent but can't turn ideas into global giants. The rocket's on the launch pad, but no one can find the keys. Without bold action, Europe's economic engine will keep sputtering. The world isn't waiting. Will Europe catch up? Europe's single market is a great idea, on paper. Goods move freely, but services, capital, and digital products face a maze of barriers. For most businesses, expanding across borders is a bureaucratic nightmare. This fragmentation stifles growth and innovation, keeping European startups from scaling up. That's why there's no European Google or Amazon. National barriers protect inefficient companies and block competition. The dream of a truly unified market remains unfinished. Europe's single market is still a patchwork. Until it's fixed, Europe will struggle to compete globally. Europe's population is aging fast, birth rates are low, and the median age keeps rising. In countries like Italy, deaths outnumber births, shrinking the workforce. Fewer workers mean less growth and fewer taxpayers to support retirees. The dependency ratio is soaring. More retirees, fewer workers funding pensions and healthcare. Europe's pay-as-you-go pension systems are becoming unsustainable. The math just doesn't add up. An older population is less dynamic. Fewer new businesses, less risk-taking, more resistance to change. When most people focus on preserving wealth, innovation stalls. This demographic shift is quietly reshaping Europe's destiny. The continent is becoming older, slower, and more anxious about the future. Without bold reforms, the grandparent boom could turn into an economic bust. The clock is ticking. Can Europe adapt before it's too late, or will it age out of prosperity? Let's talk about zombie companies, firms kept alive by cheap credit, but too weak to survive on their own. These are businesses that, in a healthy economy, would have failed long ago. Instead, they shuffle along, propped up by easy loans and a financial system reluctant to let them go under. For years, low interest rates let these zombies shamble on, tying up resources that could fuel real growth. Banks, eager to avoid losses, kept lending to them, while investors looked the other way. This created an illusion of stability, but beneath the surface, the rot was spreading. Zombie companies drag down productivity and block new, innovative firms from rising. They occupy office space, soak up investment, and make it harder for fresh ideas to take root. The result? A sluggish economy, where true progress is stifled by the weight of the past. Now, with interest rates rising for the first time in years, the zombies are in trouble. The safety net of cheap money is vanishing, and many of these companies are finding it impossible to pay their debts. Many face collapse, threatening a wave of bankruptcies across Europe. The fallout could be severe, with job losses and shuttered businesses rippling through communities. This could hit Europe's banks hard. They're the ones who lent to the zombies. If these loans go bad, banks could face mounting losses, eroding their stability and confidence in the financial system. A mass default could trigger a banking crisis, just as banks are still recovering from 2008. Memories of the last financial meltdown are still fresh, and the fear of history repeating itself is real. The risk? A chain reaction. Corporate failures leading to bank failures, threatening the whole financial system. One collapse could set off another, like dominoes falling in quick succession. The silent crisis could suddenly get very loud, shaking public confidence and sending shockwaves through markets and society. Europe's stability is on the line. The choices made now will shape the continent's future for years to come. Will leaders act before the zombies bring the house down? Or will they hesitate, hoping the problem will fix itself? The clock is ticking. Delay could mean disaster, as the warning signs grow harder to ignore. The next shock could be just around the corner. Europe must decide, confront the zombies now, or risk a crisis that could shake the world. What could turn Europe's silent crisis into a full-blown disaster? A new sovereign debt crisis. If investors lose faith in a country like Italy, borrowing costs could soar, forcing the ECB to intervene and sparking political chaos. Or a banking crisis. If zombie firms collapse, banks could fail, spreading panic across the continent. Governments now have less firepower to bail out banks, thanks to their own debt. The scariest scenario? Young people lose faith in the European project, fueling populism and political paralysis. If a major country turns against the EU, the whole union could unravel. The silent crisis could explode, economically and politically. The stakes couldn't be higher. There are solutions, but they're tough and politically toxic. First, a real fiscal union, a central EU budget, shared debt, and fiscal transfers to stabilize the Eurozone. Politically, it's a minefield. Wealthier countries fear endless bailouts. Second, overhaul pension systems. Move to funded schemes, making them sustainable and creating new investment capital. But that means tough conversations about reduced benefits and change. Third, finish the single market, especially for services and digital sectors. Tear down national barriers, harmonize rules, and let businesses scale. Finally, invest in future technologies, green energy, AI, and more. All these require unity and courage, qualities in short supply. The solutions are on the table. Will Europe find the will to act? Europe stands at a crossroads, not facing sudden collapse, but a slow, corrosive decline. The silent crisis is real, rooted in deep structural problems: no growth, an aging population, and political paralysis. The current path is to muddle through, hoping for the best. But hope isn't a strategy. The next shock will find Europe weaker and more vulnerable. The time for action is now, before the solutions become even more painful. Leaders must tell hard truths and make tough choices. The alternative? A future of diminished prosperity and lost opportunity. Europe can keep hitting snooze, or it can wake up and act. The alarm is ringing. Will anyone answer before it's too late?